Hi, it's Christopher Anderson. I'm the CEO of Profit First for Lawyers and the host of the Unbillable Hour. And I have the privilege and the opportunity today to speak with Adam Williams, who is helping business lawyers out across the country, really, with all sorts of business situations. But in particular, what I've been talking to him about, and I've found him to be a great source of information and quite honestly, wisdom, like calm, directed, do this, wait on this, like real good wisdom on the situations around what the government's trying to do to help businesses with the EIDL and with the PPP loans. I'll let Adam explain what each one of those are. But so I wanted to take some time with him today. A lot of stuff has been changing, and a lot of people who were really in limbo about EIDL, like they had no idea that, like, they submitted this application in March. Suddenly they're starting to hear from them and get money, and there's a lot of confusion about the difference between PPP and EIDL, what people can do with their EIDL funds, what they can't do, what the risks are. And I wanted to talk with him about that. But let's just start first of all, Adam, because we're in acronym hell here. What's PPP? Are we down with PPP? And what's EIDL? How are they different? What do they stand for?
Yep. And we won't even get into the FFCRA and all this other stuff. But yeah, so the EIDL and the PPP are the two primary stimulus packages or stimulus programs, I guess, for small businesses that have come about as a result of COVID-19. So EIDL, which stands for Economic Injury Disaster Loan, is actually a change to an existing SBA program.
Right, that's been around for a while. Like if you've had a hurricane or earthquake or a fire, EIDL's been there for small businesses for years.
Yep, yeah, since the 1950s probably under 7B as an SBA program. But this is the first time that really it isn't tied directly to a physical disaster. So not a hurricane, not a flood, not a fire, things like that. 9/11 obviously fell under that category. So it's the first time that it hasn't been tied to a physical disaster. And it's also the first time that it's been nationwide. The entire nation is a disaster area for this.
Right.
So pretty significant changes there. And we'll talk about how that program has changed as a result of this. And then the other program is the PPP, the Payroll Protection Program. And frankly, that's the program that's been getting all the press. That's the one that they funded with $300 and some billion, and it ran out in 10 days. You had all these companies that people believe shouldn't have been taking the money or having to pay it back now. And so the programs, they're completely different. There can be issues if you use money the wrong way, if you try to take advantage of both programs. But they serve really different purposes. And what I'm discovering is, while the PPP is getting all of the publicity and all of the press, and that's all everybody's talking about, the EIDL program may actually have a bigger impact on small businesses.
Yeah,
it's probably going to end up being a larger portion of money for many applicants, and the way that you can use it is significantly different. And although we're going to talk about some recent changes to the PPP program, it's going to have, I think, a longer term impact for a lot of businesses, and a lot of businesses aren't prepared for that because nobody's talking about it right now.
Right, impact both in what they can do with it, but also what I want to talk to you about today is what they can't, and what the pitfalls are. Because I mean, I got myself a good scare reading through some of it, because the PPP, basically, it's like, do this, and if you don't, you're going to have to pay it back at 1% interest. And it kind of seems like the EIDL is, use it for this, and if you don't, you could go to jail. Well,
don't worry, you can go to jail for screwing up the PPP too. But yeah, there's a lot of pitfalls out there.
So one of the things I think, like, a lot of people are probably in the same boat I am. So I want to kind of talk to it from the perspective of experience, right? The disaster started really unfolding in March. It became apparent that EIDL was going to be offered in a modified way. At first, there was this suggestion that there was $10,000 that you could get in 3 days pumped into your bank account. And then shortly thereafter, the PPP opened. And, I've got a couple of small businesses, and I wasn't really sure if I was going to need it, not need it. But I saw coming down the road that there's a lot of uncertainty. And like you said, there was a certain amount of money, but it seemed like a small amount of money in PPP compared to the need. So I just went around and I applied for both.
And I think that's what a lot of business owners did, because they weren't sure what was going to happen. Yep.
Exactly. And so then PPP got funded now about a month ago. And then all of a sudden, I'd heard one email from SBA on EIDL, just basically like, we've got your stuff, don't call us, we'll call you. And then all of a sudden, boom, I got an email with, here's this portal, sign this stuff, and boom, 2 days later, you're approved, and the funding hasn't come in yet. But all of a sudden, all that started happening, which I think, again, like a lot of business owners, I applied for that in March, and I haven't given it another thought, really. And now it seems like they're funding a decent amount of money, and I've got lots of ideas with what to do with it. But it seems like I can't do all of those things, and I need to be really careful about documenting what I do, and be careful about what I do with the money and documenting it so that I can prove it at some point whenever somebody asks me to.
Right.
So you already gave some background on the EIDL. Like you said, it's been around since the 50s. It's had some changes. So let's talk about that real quick first. Like how has it been adapted for this current crisis? Has the eligibility changed? Has what you can use it for changed? Has enforcement changed? What's different?
Yeah, so this is really interesting, because you at the beginning of this thing, you use the word wisdom to describe some of our advice and input on this. And it's interesting, because how do you gain wisdom on something that's pretty new and that changes all the time?
Yeah, well, I know for a fact that one of the ways that you're doing what I'm not doing, quite honestly, I started to do at the beginning of this. And then I heard that you were doing it and your team was doing it, and that as a business, that you were spending the time, so I don't have to. But one of the ways you gain wisdom is I know that you and your team have been poring over the rules as they come out. You've been studying this. So yeah. You don't have wisdom of years, because nobody's got wisdom of years on this thing. But you've given it as hard a look as anybody I've heard of.
That's fair. So here's what's happened with the EIDL and why it's been a challenge to stay in front of it. When they created this as part of the new the COVID-19 laws, they said that businesses would be able to borrow up to $2 million. They said that you could get an advance of $10,000 within 3 days. And that was newsworthy at the time.
Yeah.
A lot of people went out and found the old, or I guess current, but different SBA 7B application, and went out and filled that out thinking, this is it. This is how I'm going to get my EIDL. And that was one of those moments where we said, let's hold off a little bit. Let's wait and see what happens. And within a week or two, the SBA issued an expedited application. So you could apply for this loan in 10 to 12 minutes online if you.
Yeah, I mean, it felt like I was like, my name is Chris. I have a business, and send me money. I mean, it was like 3 questions.
You put out your hands,
Yeah.
Yep, and that was it. And like you said, people submitted that and forgot about it. And I don't know of anybody that got that advance within 3 days, even though it's part of the law that happens.
Yeah, mine took 30 to get the.
Yeah, advance. It was at least that for us too. So what happened after that is the SBA came out and said, wow, we had a lot of people sign up for this program. So now we're going to cap the loans at $150,000. So that $2 million cap went away. It's $150,000. And
again, to be clear, that change is only on the EIDL as it pertains to the COVID situation.
Right. If there's other disaster loans out there, those haven't changed. The funding for those hasn't changed. So that was change number one, is they capped the loan limit. But we've talked to some business owners who got bigger EIDL loans before they made that change. So we've talked to some people that have gotten some pretty significant sums out of this. But if you haven't been approved for a higher amount yet, you're going to be limited to $150,000.
Yep.
The other part of it was with this advance that was supposed to hit your bank account in 3 days. On the application, you just checked a box saying, yes, I would like this. Yeah. And it sounded like everybody was getting 10 grand. But again, the SBA came out and said, this has been pretty popular. So what we're going to do is we're going to give you $1,000 per employee based on your own certification of how many employees you have. So no notice, no advance notice on this or anything. That money just hit people's bank accounts.
Literally, like it just came in. And what's weird is two of my businesses got $2,000 per employee, and one of them got $1,000 per employee. I don't know, like maybe our applications got in before the rule change or in between rule changes. I don't know.
Well, nobody knows.
Yeah.
But that money hit a lot of bank accounts. Some people haven't even noticed it. You know, if you run $1 million business and you have $5,000 at your bank account, you may not notice it until you reconcile your checking account a month from now. So,
well, it was so clear on the bank statement. It was like Treasury. Yeah. That's what it said.
Yep. Yeah. Which is, I have a similar story with my stimulus payments that I was supposed to get. It just showed up in the bank account but that's a story for another day. But yeah, so this advance hit the bank accounts. Now, the good news is, no matter if you decide not to borrow money, any additional money from EIDL, or if you get rejected for EIDL, no matter what happens with it, that advance is yours. That's considered a grant. Now, there's limitations on how you can spend it, we believe, just like there is with the rest of the EIDL. But if you got that money, that's yours to use in your business, subject to certain limitations. So big promises as far as loan amounts and speed and things like that. The reality has been something a little bit different. And so after the advance, that's what brings us to the loan itself. And that's where you are. We had a similar situation, and we've seen a bunch of clients deal with it. The SBA just sends an email that says, we're ready to let you in our portal now. Yeah. And you create your account. So our timeline, I got that email after hours on Friday, signed in, and it said you're approved for $150,000. I don't know how they calculated that. I don't know where it came up. Where they
the cap, right? You got the cap
limit. So I created my account. You can accept less than that. There's a little sliding bar there that you can
from $1 to.
Yep. And if anybody, if anybody out there goes through this process and borrows $1 from an SBA, I want to see what those loan documents look like. So Friday afternoon, we get the email. We accept it. Sunday, I had the loan documents provided to me.
Right. I
DocuSigned them in the drive-through getting breakfast on Sunday, right, and the money hit my bank account on Tuesday. And I've never found it so easy to put $150,000 in my bank account. And I think this is what's going to catch a lot of people off guard. We're talking to some business owners that only make $25,000 or $30,000 or $35,000 a year, getting six-figure loans from the SBA.
Right.
So they need to have a real solid plan in place for how they're going to use this stuff.
And I was talking with a couple of folks, just like you and me, we're lawyers. And so we kind of have an inkling, like we know what it is to have some money in our accounts that's not ours to spend however we want.
Yep.
And so we have some discipline around this. But yeah, you've got, like you said, you've got a liquor store owner who's taken home $50,000 a year, but he's got, a lot of inventory moving through, a lot of revenues that justify a large EIDL loan. All of a sudden gets $150,000 plopped in his bank account. He's got no history of segregating money and dealing with this is not my money or this restricted money.
Yep.
A lot of people are going to suffer with that.
So that's one thing that I'm advising people. Like I practically read loan documents for a living.
Right.
I'm used to the terms that are spelled out in these things.
So in other words, the note that they sent you to DocuSign in the Wendy's drive-thru was crystal clear, and all the terms were really easy to understand.
Yeah, as I read it on my iPhone, scrolling through like this, right? And this is one of the issues that we're seeing is what is spelled out in the normal SBA 7B program for disaster loans compared to what is in the loan documents, compared to what lawmakers and what the rest of the SBA is saying about things. There is some conflict. So there's a pretty widespread understanding that you can't use your EIDL to refinance long-term debt. Because it's going to be a 3.75% interest rate for most businesses. Nonprofits, it's 2.75%. That's a pretty good rate. That's a really good rate for commercial loans.
Yeah.
So you can't go out and take your other mortgage that you have on your building that may be at 5 or 6%. You can't refinance that. But I think there's going to be a lot of temptation to do that. Same
Absolutely.
thing if you've got loans on equipment. But I don't think it's that clear in the loan documents that restriction is there. So this is
one of my concerns that you probably know or at least can speak to is like the loan indeed, I found there to be a lot of what people are saying about them aren't specifically spelled out in the loan documents. However, the loan documents do reference regulations,
Yep.
which I think, if I'm not mistaken, are more than a page of regulations, book of regulations around this stuff that nobody's going to go read.
Right.
That may be where the devil exists.
Yep. Yeah, and that's it's challenging because the loan documents that they're using are the normal disaster loan 7B loan documents.
Right.
So when your building burns down, they don't want you to pick up your business and move it somewhere else. They want you to rebuild that building. So
that's one of the things I caught was that you can't move.
Yep. So and there's restrictions on using the money to pay for physical damages. Well, we don't have physical damages. This wasn't a hurricane. This wasn't a flood. This is something we've never seen before. Yeah. So these documents really haven't been tweaked in a way that addresses this current crisis.
Right.
And I think that's going to prove challenging for a lot of people, especially because, and if we can, I just want to tell you what documents are in there, because I think these are going to be pretty standard. Okay. So you sign up on the portal, you decide the amount of money that you want to accept or based on what they've offered, and then they'll send you the loan documents. And there's 3 documents in there. One of them is a loan authorization and agreement, the LANA, because we need more acronyms. That is actually where I think some of the most important terms are, and we can talk about those. The second document is a note. That's a pretty standard document that you're borrowing money and you're agreeing to pay it back. It's got the interest rate. It's got the payment terms. The payments are deferred for 12 months, so you can.
But not the interest. The interest accrues.
Interest accrues. And so your first payment will be in 12 months, and it's got the rest of the repayment terms in there. But it does reference that you're subject to the restrictions in the loan, what I'd call the loan agreement. And then the third document that comes along is a security agreement. So if your EIDL is more than $25,000, the SBA actually has a lien on some of your assets, some of your company assets. And this is another thing that I don't think people are prepared for. If the SBA has a lien on your equipment or on your inventory, and you make substantial changes to that, you may be getting yourself in trouble if you don't get the SBA's permission to do that type of thing. So I think in total the documents are maybe 20 pages. Mm-hmm. But if you're not familiar with these types of documents, you're going to have way more questions than answers, because some of this is standard commercial borrowing language, but that's not language that many business people are familiar with.
Right. And not for nothing, I mean, as you experienced, the DocuSign, it's click, click, click.
Yeah.
Right. And I actually read the entire thing. I got it on my phone like you did. And I was like, you know what? I want to do this. I'm going to wait till I'm back home and have it on a computer screen and read through it. In all honesty, not being a guy who reads loan documents every day for a living, I'm not sure it helped that much. And that's, where I think, if anybody who's getting this loan should talk to someone like you, as I am, because there's a lot in there. And like you just said with the lien, it gives them the right. And I imagine that's the other people who I think aren't prepared for this is all the clerks of court across the country who are going to be getting UCC 1s filed from SBA on thousands of businesses. But I think a lot of businesses that have inventory or a lot of, have equipment aren't really thinking about the liens. And then, like you said, the permission, like you own a PBX, or you own a computer server, or you own furniture or whatever. You can't just go sell it now.
Or a piece of machinery.
Yeah.
Right? I mean, this isn't a lien on real estate. That's going to be through a mortgage or a deed of trust or whatever it is in your state. But yeah, if you've got a big piece of equipment, there may be limitations on selling that if you don't get the SBA's approval. And let's not even get into the fact that it says you can't make distributions to owners without the SBA's consent.
So let's talk about that for a real quick second, because I know a lot of business owners who have subchapter S corporations, for instance. Pay themselves, they usually talk to their accountant, which we both advise they do, and make decisions based on the advice of competent accountants to pay themselves less than what they want to earn from the business as W-2 salary. And then they take the remainder of what they actually want to be compensated as periodic, regular draws. So as for an example, let's say somebody's got a business. They pay themselves $75,000, or let's make it easy, $72,000 by writing themselves W-2 paychecks of $6,000 a month. And then they also distribute $10,000 a month in regular distributions that they consider to be their whole compensation. What are the restrictions on EIDL about continuing that level of compensation once you've achieved or received an EIDL loan?
Interesting question, because what I think the documents say versus what I think is actually going to happen are two different things.
Yeah.
So I'm going to assume that everybody gets the same loan agreement that I do, because I don't think they're customizing these. I just think they're changing the amount and the business name. But it says without the prior written consent of the SBA, you won't distribute any assets, which means if I've got a vehicle or something that my company owns, I won't give it to myself. Won't make any advances, loans, gifts, bonuses to any owner or partner, or anybody in control. So the interpretation of that is distributions of cash, right? Regular distributions that you make to yourself are problematic. They are prohibited without the SBA's consent. That's what it says. I think the reality is, as long as you're not making substantial changes to the way that you make distributions. So if you've got a history of doing it a certain way and you continue that, and it doesn't affect your ability to repay the loan, I think you're going to be okay. But let's look forward 6 months on this too. Here's the other thing I'm trying to figure out. Between the EIDL and the PPP, the SBA has been on a hiring frenzy.
I bet.
Because the PPP program, they've lent something like 20 times what they lent in all of 2019, right? In 2 months.
Right.
They had to hire a bunch of staff to do that. And I'm curious, when the program's over and people have gotten their forgiveness or they're in repayment, what's going to happen to all those employees? Is the SBA going to say, best of luck in your future endeavors? Or are they going to say, hey, we got some audits you could be doing now? And are they going to send these folks out to look at these business owners and review their documents? The lawyer in me says be very cautious, because they may very well do that.
Yeah, bureaucracies don't eagerly shed employees once they get them.
Right. And that's actually another one of the requirements in there. And this is, again, unless you're really familiar with borrowing money through your business, this is going to catch you off guard. So most people are familiar with the mortgage on their home, right? As long as they make their payments every month, they're going to escrow for their taxes and insurance. Yep. And it'll change, the payment will change once a year if their taxes or their insurance go up. That's it. Business loans are a little bit different because you've got obligations on top of that. So the SBA requires you to maintain your records for a long period of time. It's at least 5 years that they want you to keep records of how every penny was spent. They want contracts, they want invoices, they want documentation. So you've got to keep that. And again, there's a strong risk of audit here. The other piece is once a year, you have to submit your financial statements to the SBA. So this is where, things like those distributions or making substantial changes in the business are going to raise red flags, because it's your obligation to provide this information. I doubt they're just going to receive it and throw it in a file. Somebody's going to flip through that with some level of scrutiny, and you may need to justify some of the decisions that you've made. So,
yeah, and back to our liquor store owner, he may not have a history of doing financial statements, right? He might have gotten this loan and thrown together some stuff that was necessary for the loan, which if I recall, again, I had to do more for PPP. I'd at least give him a P&L and a wage statement. But for the EIDL, I don't think I was asked for anything.
So the EIDL asked for revenue through a 12-month period, and it asked for cost of goods sold on this expedited application. I had business owners that didn't even know how to calculate that for their business.
Sure.
And if you can't figure that out, you're going to be in deep trouble when you have to submit your financials once a year to the SBA. Now, the good news is what you can use the EIDL for is ongoing operating expenses. Mm-hmm. And guess what? That probably includes a competent bookkeeper or accountant. So you can make sure that your books and records are in good shape. And you and I both know very well that that's going to be, if you don't have that stuff now, that's going to be a huge benefit to your business. Having those documents prepared. So yes, it's scary that you have to do this for the SBA, but on the other hand, it's good for you to do that. So,
and of course you're going to be wanting to find an accountant that is going to be concentrating or focusing on learning what's needed, on learning how to position your spend in a way that the SBA is going to see it as okay. Within the bounds. I mean, listen, there's lying and there's telling the true story in different ways. And a good accountant knows how to tell the story the right way. And that's just going to be super important. And I know accountants, I know my accountant is like, they're running right now like crazy doing continuing education and learning about this. And like you said, it's still changing, right? There's like, it hasn't settled down yet.
Right.
As to what can and can't be done. So you said like ongoing expenses is definitely going to be a thumbs up. Distributing cash, not a thumbs up. One of the things that caught my attention was language about expanding the business. You already mentioned no repairs because it's kind of like what was in what's in regular disasters, right? And that's because they're looking for businesses to look to their insurance companies for repairs and that kind of thing.
Right.
And the restriction on movement is like the whole reason this thing exists is so that when there's been a earthquake, when there's been a fire, when there's been a flood, that all the businesses don't pick up and move away and leave that location in destitution. It's to really help a community. That's why those are there. And so in this circumstance, since the disaster area is the whole country, moving might not be that big a deal unless you try to move to another country. But what about, the expansion of the business? What about those kinds of things that are in there? Let me give you a hypothetical to help answer it. My business, the marketing and some of the clientele, that the marketing is not working the way it used to work. And some of the clientele aren't buying right now. So in order to keep the business viable and as a going concern, got to do a large amount of marketing spend in this direction instead of this direction, and go after a different target market, which could be seen as an expansion. How do you see that?
Yeah. How do you survive without expansion is one of
that too. Growth is growth, right?
Yep. I think that it depends is the answer, right? Such
a lawyer answer.
But this crisis is going to cause a lot of businesses, and already has caused a lot of businesses, to have to make changes to the way that they operate. And I think that marketing spend is one of those changes, and marketing spend may have to increase for a lot of businesses.
Yeah.
So the language in the loan agreement says you're going to use the loan solely as working capital to alleviate economic injury caused by the disaster. So what does it mean to alleviate economic injury? It's a tough one, because you also can't use this just to fill up the revenue that you've lost.
Right.
But I think if you can, I think if you can draw a line from A to B that crisis caused this, so that I had to make this move, I think that's acceptable. But again, I think of this as like the monthly budget type stuff. The payroll, the marketing, the rent, the mortgage, like the bills that you have every single month. You can't go out and use this to buy a new piece of equipment. You can't go out, and I wouldn't suggest using this on a fat security deposit for a new location, right? But those like monthly expenses that you have. So yeah, I mean, in our firm, we have to hire because we have to make changes to the way that we do business right now. And we are going to use some of this money to float the cost of that person for a couple months until they're generating a profit for us to cover their salary. But yeah, this is one of those areas where there isn't great guidance, because we're looking at loan documents that aren't really applicable to this situation and trying to make decisions based on that. But yeah, like the issue that you have, I think a lot of businesses have, that we need to make changes. We need to adapt.
Yeah.
And it's because of this crisis. And so we're going to use these loan proceeds to do that.
So you mentioned something that like caught my ears, and I think probably a lot of people will want to know the answer to this, because you said you're going to float some salaries. One of the criteria in the EIDL loan is, and I think under federal law generally, is that you can't use two kinds of federal aid from two different agencies or even from the same agency for the same purpose at the same time.
Yep.
So you mentioned payroll. I don't know if you've even gotten a PPP. I think a lot of business owners who've gotten the EIDL also have PPP. So can you speak to that question about, can we use this for payroll?
This is huge. This is huge. Yep. So we did get a PPP. And again, we're a fast-growing law firm. Payroll is a huge expense for us, but our EIDL is something like 2.5 times what we got for the PPP.
Right.
So initially, we had 8 weeks to spend that PPP money, right? I think everybody's pretty familiar with that idea. Now, as of this moment, the House and Senate have passed a law to extend that to 24 weeks. President hasn't signed it yet. But during that 8 weeks, I'm not going to spend my EIDL money on payroll. I'm going to spend my PPP money on payroll.
Right.
So I think the SBA's guidance has been pretty strong here that you can use EIDL money prior to your PPP period, whatever that is, whenever that is, and you can use it afterwards for payroll, or you can use it for other expenses, right? So things that aren't covered by the PPP. So yes, there are restrictions on that.
Which, by the way, everybody should be aware, if they're planning on using the PPP for rent and utilities, which are permitted also, watch that with the EIDL too, I would think, right?
Right. And there's two reasons. One is the EIDL is requiring you to keep all of your invoices and contracts and documentation. But two, if you want to have a well put together PPP forgiveness application, you're going to want to have that documentation as well. So yeah, that for either for a potential audit through the EIDL or for the eventual forgiveness application through the PPP, you want to have your documentation really lined up and tied up with a bow.
So, I mean, can you give some, like, I think you've touched on them, but I just want to get some clear examples of things that people should just know are absolute black letter. You can't spend the EIDL money on fill in the blank.
Don't go out and buy yourself a Ferrari.
Yep.
That's going to look bad for two reasons. One, it's going to be a distribution, and two, they actually want you to buy only American-made products.
And that's in there. That's in there. I saw that.
Yeah, there's American-made products, and you have to comply with equal opportunity, both with employees and with customers. So if you're a business that discriminates against certain protected classes, we've seen bakeries doing this and things like that.
Just think of that.
You can't do that anymore.
Yeah.
So yeah, I got a little bit off there, but yeah, things you can't spend the money on. So we need to put an addition on our building. We need to expand our office because we've been growing. We can't spend the money on that. That is a capital improvement. That is not, that's not working capital. That's not an operating expense. We could not go out and buy a piece of equipment, right? So especially, I would look at it this way. If it's something that you're going to depreciate over a course of years on your taxes, probably not something you want to spend the EIDL on.
Probably like new computers for your employees, probably okay.
Probably, right? If it's not part of a massive upgrade system-wide thing, but if it's, hey, we replace a couple laptops every couple months.
I was talking, you're expanding your team. Like you're going to have each one's going to probably need some new equipment.
Yep, I think that's fair. What other, vehicles, equipment are the big things. But if you've got inventory that you need to stock up, I think that's a great use. If you've got employees you need to pay, I think that's a great use. And let's not forget that part of this whole thing with employees collecting so much more money on unemployment than they're earning in their jobs, there is going to be some upward pressure on wages. So I think business owners need to be prepared for that too. And again, I think that's directly related to this crisis.
Yeah,
people were laid off. They want more money to return to work. We've got to pay that money, but we may not see that. We're going to have to increase our prices to cover it. That may not happen immediately. We may not see that immediately. So I think this can be a great use of those funds.
Cool. I think you laid it out pretty good. Like capital, if you know what capital expenditures are, don't do those.
Right.
Yeah. And like, I think you gave a great example. If you're going to depreciate it, that's a good sign that it's probably a capital expense.
Yep. But I think building up some inventory, I think paying salary and wages, I think those are really good uses, subject to what we said earlier, restrictions on PPP and things like that. And again, in the loan agreement, it says you need to buy American-made products, and there's the equal opportunity. You actually have to put the poster up in your workplace, and they give you the example poster saying that you're not going to discriminate against anybody. And again, not that everybody does that, but it's one more massive pitfall that you need to be on the lookout for.
Now, that doesn't mean you can't do some of these things with non-idle money, right?
Right.
So let's say, for instance, that you've received these, and so you said your business is actually growing in a different direction, but which is going to be costly in the beginning. Some businesses are hurting, but their revenues aren't to zero, and some businesses will start to recover, and will have revenues. What do they need to do? Like, I've heard some talk about sort of left pocket, right pocket, right?
Yep.
Well, if I'm able to use idle to pay for these new employees and or these computers and or this inventory that I normally would have had to pay for out of revenue, now I've got this excess revenue. Can I use that for some of this stuff that would be prohibited under idle?
Yeah, and so this is our advice from the beginning with the PPP and the idle has been put the money in a separate bank account.
Right.
And I'm married to a CPA, so I can talk about this in a negative way, but it is a bit of an accounting game, right? If you've got dollars coming in and you're still generating a profit in your business, but you've got this other source of funds, document what dollars you're spending where, right? I think that's good advice, and I think that's perfectly acceptable given what I know about the program right now. There are rumors that the SBA is going to come out 6 months or 12 months from now and say, hey, the disaster's over.
Disaster's over, guys.
Yeah, you haven't spent all your money. Give us some of that back, right? Now, that's not the worst thing to happen, because if the money's still sitting in the bank, you're able to do that. But there's a balancing act there. That what happens if you get through your 8 weeks or your 24 weeks with your PPP and you've spent all of that money, and then we start dipping into the idle money, and then we declare this disaster over and you haven't spent the money, then what happens? And this isn't really clear. And this is why it's a conflict with how the program has been historically run. Is usually with 7B loans, you take draws on your loan. So if I'm approved for $150,000, I'm going to go in month one and say, I would like 25,000 of that, and they'll give it to me, and I've got the rest available. But this hits your bank account in 5 days.
Yeah. In fact, I read like they could draw it out over 6 months or something like that. Yeah. And this, like you said, yeah, for most everybody I've heard, the whole amount is just getting plopped in.
Yep.
I think like your recommendation for my clients who run Profit First, this would be pretty easy. This is just like another Profit First account. You just segregate the money over here, and then it's also really easy. It's like, oh, you're taking money out of that account. Document that.
Yep.
Like, you're keeping all your records. You're going to have to submit your financials, but you're taking money out of that account. Have a logbook and write down taking $2,500 out for this purpose, and the receipt is here, and that's been documented, so that when they come back for their money. But again, most businesses, if you don't do that and you haven't segregated the funds, they're going to come back looking for their money legitimately.
Yep.
And you're going to be like, I don't have it, and that's going to, first of all, probably do a proctological audit as a result, and it's going to cause people problems.
Yeah, major problems. So we joked at the beginning of this that yes, if you screw this up, you can go to jail, right? You've really got to screw this up. You've got to buy the Ferrari or take some obnoxious vacation. But the people who use this to refinance the wrong type of debt or fund the physical expansion of the office or relocate, probably not going to go to jail for that. You may, but hire a lawyer. But the SBA may say that you owe us all that money back now. And if you
actually, I saw something in the loan documents that said something about 1.5. Like towards the end, it said something like, if you violate the terms of this agreement, we can ask for all our money back, and as a penalty, 1.5 times the amount. There's
a penalty plus attorney's fees and who knows what else. And let's go back to, if it's over $25,000, they've got a secured interest. They can sell your stuff. They can sell the computers that you bought or the inventory you've got sitting around. So yeah, jail is bad, but also so is having the SBA sell all of your inventory out from under you. So that's a very good reason why you want to document this very, very carefully. And that's what I don't think most businesses are prepared for. One of my best friends runs a business, makes a whole bunch of money, a bunch of employees. But every time he goes to the gas station and swipes the company debit card, it's categorized in his QuickBooks as cigarettes, because that's usually, could be gas, could be food, but it's cigarettes. That's the line item on his chart of accounts, right? We don't want the SBA to see that with your with your idle funds.
No, indeed not. So listen, this is like, the other thing is, like, I think you said you have to certify every year certain things about the loan. Is this every year that you owe money, or every year that you are spending the money? I wasn't clear on that.
So during the repayment period, you're going to have to give your financial statements every single year. I don't know what other additional certifications they're going to be asking for, but there is some flexibility. The SBA actually can require you to have your books and records prepared in a different way at your expense. So if you give them your QuickBooks report and they don't like it, they can say, no, go hire a more expensive accountant to go do this the right way.
Right, there's a thing that they can require, like accountant certified books, right? Or like not full on audit, but where accountant signs off and goes like, these books are true and correct to the best of my knowledge.
Which accountants charge a lot of money to do that because it's their reputation on the line.
Right. So listen, I've got these businesses. I'm going to use the idle funds. I'm going to try to dot my I's and cross my T's. But, the prospect of 1.5 times liability, the prospect of, I'm a lawyer, right? So the prospect of some allegation that I've done something improper, which could have effects on my license, could have effects on my reputation. I'm going to lose sleep over this unless I feel much more comfortable than I do today about, not every year when I have to certify to the SBA, but every month, like going over what I've done, and this may be just a shameless plug for you, but what can I do to sleep better at night?
Yep. Well, let me pile one more problem on top of there.
Yeah.
Most commercial loan documents say if you're in default under another loan, you're in default under our loan.
Yeah.
So if you screw up your EIDL, every other business loan you may have, the bank may come knocking because they don't like that you're not paying or not complying with some other loan terms.
Yeah. So it has nothing to do with non-payment, right? It could be non-compliance.
Yep. Yeah, this may trigger a whole waterfall of issues. So yeah, with that, let me plug it a little bit. I think you need to be consulting with your accountant and or bookkeeper and an attorney on this who knows what they're talking about. And we've said this both with the PPP and with this program. I think one thing, because it's not black and white, because you can't get a list that says, here's what you use the money on and here's what you can't. Because we're looking at laws and regulations and interpreting your specific situation, the best thing you can do is have an attorney give their blessing on that and say, I've reviewed the law and the regulations and the rules and everything else. I've reviewed your loan documents. I've reviewed the proposed way that you want to spend this. And they can give you, attorneys usually call it an opinion letter that says, here's what you've told us, here's what we know. And given the status of the law, you're okay. So I think if you did get audited, I think if the SBA came knocking, having that letter in your hand from an attorney who knows what they're talking about looks a heck of a lot better than, I know my books say I spent $12,000 on cigarettes, but I didn't really, right? So I think there's a balance.
It takes willfulness out of it. It takes the recklessness out of it. It takes disregard out of it.
Yep.
It may not be I don't want to keep using the word jail, but it may not be a get out of jail free card. In other words, you may still have screwed it up, but you did so with diligence and care, and they'll be more inclined to help you fix it.
Yep. And if for some reason your attorney really, really messed it up, they've got professional liability insurance to cover it.
Yeah, which is
covering
you.
That's the letter that puts them on the hook for it. So yeah, it's not just a matter of your lawyer writing a letter saying your proposed spending of this is okay. It's that lawyer putting their license on the line to some extent, saying
the same reason I have my taxes every year signed off by my CPA. It's just, it's a professional who knows more than I do about this saying, based on what we've been told, this looks good.
Yep.
This is right and this is accurate.
Yeah, absolutely.
So I think we've gone over like what you can and what you can't to the extent we know and that it's clear, and acknowledging that a lot of it's not clear. I think we've covered how the PPP affects it. Here's the one question I didn't ask you yet that I really am curious about. I did get, like I said, I got the advances on the EIDL, and I've heard, and I think you said that if I had decided not to get the EIDL, if I got rejected for the EIDL, those are grants maybe they check as to what I did with them. Maybe they wouldn't, who knows? But I don't have to pay them back. Now that I accept the EIDL, do those advances get rolled? Are they part of what I owe, or are they still grants? Or is that clear?
Yeah, that's a really good question. So let's give the example where you maxed it out, right? You got your $10,000 EIDL advance, and you got $150,000 EIDL loan.
Yep.
You've in total received $160,000, $150,000 of which you have to pay back.
Okay, so the $10,000 remains a grant under that circumstance.
But if you also got the PPP, your PPP forgiveness will be reduced by the amount of any EIDL advance that you got. So if you're going to get $80,000 of PPP forgiveness, that would be reduced by the $10,000 advance that you got.
Regardless of whether you use that advance for payroll or not.
Correct.
Okay.
Correct.
Because I know that the PPP, in the application for the PPP, it asked you if you got an advance or any EIDL funds before April 3. Mm-hmm. But you're saying that in the forgiveness portion, it doesn't. April 3 is not going to be a deadline. It's going to be, as far as we know.
So this is another interesting one. If we know what the law says, but we wonder if it's going to be different in practice. The PPP forgiveness application, which we have spent hours going over, and we have created and are selling the most beautiful spreadsheet imaginable to handle this thing because it's so complex. The forgiveness application does ask you the amount of your EIDL advance. But what it doesn't do, you calculate the amount of your forgiveness. But what you would expect to see is the next line minus your advance, and that's what forgiveness, but it doesn't do that. You calculate your forgiveness, it asks for the amount of the advance, but it doesn't do the math on there. So the law says, yes, PPP forgiveness is reduced by your EIDL advance, but the application doesn't make that clear one way or the other. So I guess there's a possibility that your PPP forgiveness is not reduced, but we're not banking on that.
But the law says it is.
The law says it is, but again, the law says a lot of things. The law never said, we're getting off topic a little bit, getting into the PPP, but the law never said you had to spend 75% of your payroll or PPP on payroll. The law didn't say that.
Right.
The SBA made that up after the fact because it seemed fair, right? The SBA and the Treasury decided that, we don't want people to spend this all on rent or all on utilities and mortgage. The purpose is
it's the payroll protection program.
Exactly, right?
Yeah.
So they made up that rule after the fact. So I guess there's a possibility out there that they say you can have both the advance and full PPP forgiveness, but at this moment I wouldn't plan for that.
Right. And then you said there has been, by the House and Senate, new legislation passed both houses, but not yet signed by the president. Indications are that the president will sign it. That changes the 75% to 60%, I think is right. Yeah. And the 8 weeks that you had to spend it to 24 weeks.
Yep. And
the safe harbor for bringing your head count back up goes all the way to the end of the year.
Yeah, it goes through December 31st.
Yeah.
So here's the mindset issue that's happening with the PPP Flexibility Act, I think it's called. Is we learned, or we've, over the last couple of weeks, thought we have 8 weeks to spend our PPP money. We've got to spend 75% on payroll. That's where it started. That evolved over time. There were some other exceptions in there. And now we're looking at this new law which will probably get signed into law pretty soon by the president. And we're saying, we've got 24 weeks now, and we only have to spend 60% on payroll. And I think a lot of people are looking at that and going, all the pressure is off now. When in reality, no. There's still plenty of pressure. Like, you would have been complaining about these restrictions too, had they been in effect from the beginning, but it is quite a reduction in those restrictions. So yeah, here's the other fun changes that have occurred on that, though, that I think are going to make employers' lives easier if this is how it gets signed into law. So one thing on the forgiveness application that changed was if you, and this was part of the FAQs that were issued from the SBA and the Treasury also, but if you reduce your head count, your PPP forgiveness got reduced. But if you made a written offer to bring your employees back at the same wage and the same hours, if they turned that offer down, that didn't affect your head count, right? So I could say, Christopher, please come back to work. You'll have the same job, working the same hours, making the same money. And you said, no, I don't want to do that. That doesn't affect my forgiveness, right? So that's good. But with the Flexibility Act, there have been a couple other changes that they threw in there that basically, if you can't find qualified employees, if you can't convince anybody to come back to work, that's not going to affect your headcount calculations either. And I think that's really good news, because I think a lot of business owners are going to find that they're going to have to pay a lot more money to employees now to convince these employees to come back to work. And there's, a pretty good chance that these unemployment benefits continue and those get extended. So there's going to be some artificial upward pressure on wages right now. Yeah. And fortunately, that shouldn't have as big of an impact on PPP forgiveness. So yeah, yes, they've lessened the restrictions, but let's not forget there's still restrictions. So,
right. Absolutely.
So yeah, I expect that to get signed in the next day or two. I think that is welcome relief for a lot of businesses. In Pennsylvania, a lot of businesses are still on lockdown. So there are some businesses that couldn't have even brought their employees back at this point to do anything.
Right. Yeah.
So I think that's welcome relief for them.
All right. Well, that answers the main questions I've had about the EIDL and the PPP and how they interplay and what some of the pitfalls are. And as great as the explanations were, I'm still getting a lawyer because I got to sleep at night. And I hope that a lot of folks seek out attorneys either attorneys that they've already been working with to work on with this, or attorneys like you that have been studying the hell out of this. And getting some really deep knowledge, if not wisdom, about what's going on now. And I think if this conversation hasn't highlighted this, let's make it explicit. This conversation would have been different a week ago. It keeps changing. Yep. The ground keeps moving. The goalposts keep being shifted. And listen, as a business owner, that's not my job. I've got to get out there and do marketing and sales and hire people and service customers. And I need someone else to worry about the goalposts moving and to give me a call and go, hey, Chris, we need to make this change because this has changed in the law. I'm
actually going to tell you that all those things, sales, marketing, production, hiring, those are more important now than they were 6 months ago.
Yeah.
So yeah, I would do everything I can to reduce everything that distracts me from that, because right now, focusing on the nuts and bolts of your business is going to be way more important than these other programs. These are important, but they're only here to help level out the seas temporarily, right? You still have a business to run when this is all over. So yeah, I think that's good advice that you're giving people, and you understand the value of bringing in experts to handle things for you, certainly.
Another really important question I wanted to ask you, Adam, you mentioned as we were talking about you can't use this to go refinance your mortgage. You can't go, I don't think you said these words, but you probably can't go and take your 7% line of credit that you got a $30,000, $50,000, $100,000 line of credit with a bank. You can't go refinance, pay that off with this. That's clear. First of all, do I understand that right? Is that what you were saying?
That is sort of what I was saying. Yeah,
okay.
Clear is a bit of an overstatement, but there are limitations, certainly.
Okay. But so what the question I didn't ask and what I meant to was, what about regular payments on that? Because it's regular course of business. Let's say I have to pay $800 a month on my line of credit right now, or I have to pay $1,500 or $3,000 on vehicles, or I have to pay $6,000 a month in rent or mortgage.
Yep.
Those are debts. Well, rent's not, but the other ones are debts. We can't refinance the debt, but can I make my regular debt payments? Can I make my regular debt payments on my credit cards?
Yeah.
Business's credit cards.
Business's credit cards. Huge distinction, right? Yeah. If you're paying your personal credit cards, that's going to look like a distribution.
Like a distribution, yeah.
Yep. So yeah, I think the loan documents, the loan agreement and the note make it pretty clear that the intent is ongoing expenses. That includes debt service, your monthly obligation for credit cards, mortgages, lines of credit, other loans that the business has, right?
Yes.
I think that is actually clear that you're allowed to do that. Where this gets confusing is on the refinance piece. So
right.
Do not go out and refinance long-term debt. If you've got a 5-year, 10-year, 30-year loan through your business, it's probably at a higher interest rate. Don't go out and refinance that with this. That is going to look bad. But where it's not, I don't think it's 100% clear, either from the law or the loan documents, is refinancing short-term debt. And most accountants will tell you the short-term debt is debt that's due within 12 months, right?
Like a line of credit.
Line of credit, like a credit card, potentially. I don't think that's really clear. I think we're probably going to get some guidance on that, but I think right or wrong, you're going to see a lot of business owners that do go out and take their EIDL and pay off company credit cards with it. The payments are going to be deferred for a year. The interest rate's going to be a heck of a lot lower, and that could really open up a lot of cash flow. Same thing with line of credits. I mean, line of credit terms are usually pretty good for businesses, whether they're secured or unsecured. But I think most lines of credit are accounted for as short-term debt that are due in less than 12 months. And I think there are people that will go out and refinance through the EIDL. And honestly, I don't know if that's right or wrong at this point. I know that there are people saying don't do it, and that's a very safe bet.
It's safe, right?
I think there are people saying you absolutely can do it.
Oh, really? Okay.
I'm somewhere in the middle that I understand that can be a huge benefit to a business. Let's think 3 steps ahead. Let's say I did go out and pay down my entire line of credit with this money. I defer my payments for a year, I reduce my interest rate. Unless you're totally obnoxious, that's not the type of thing you go to jail for. But it could be the type of thing that the SBA says you need to repay that money. Like, we're calling the loan, you owe us all the money. Well, pull it out of your line of credit and pay it back, right? Yeah. So, a lot of this stuff, and we alluded to this when we were talking about the opinion letters, it comes down to intent. And if your intent is to rip off the government and your intent is to do things the wrong way, that's a problem. But if you're trying to act in good faith and you're getting good advice and you're researching the law as much as you can, I think that's how you keep yourself out of trouble.
Yeah, and freeing up working capital, which is what this is really supposed to be about. That's great. Okay, good. I'm really glad that I got to that question, because that one seemed like one of the other pitfalls that I'm thinking about, and I'm sure I'm not the only one.
Yep. Yeah, and that comes back to the old regulations that are more than a single page. That's where the refinancing of long-term debt comes into. I think that does permit the short-term debt refinance, but the question is, what's short-term debt? So a little different for everybody.
Yeah, the credit cards are a really interesting version of that, and like different credit cards, like my Amex, right? My Amex is due in full every month. Well, one of them is a charge card, one of them is a credit card, one of them is a little bit of both. And what can we do?
Yeah, so don't go out and use your Amex to buy a new car and then use your EIDL to pay off the Amex. Yeah, right? That's not going to look good.
Exactly.
I think a lot of people are going to get a lot of benefit out of this, because the questions that you're asking are the questions that everybody's asking. And the irony is, over the last 10 weeks, the SBA and the Treasury have been issuing FAQ documents. Theoretically, those are frequently asked questions. Those are not the questions that business owners are actually asking.
They're not. Right? They're really not.
They're not the frequently asked questions. So I think something like this gives us a good opportunity to talk about the things that are on a lot of people's minds, and hopefully they get some benefit out of that.
Awesome. Well, thank you for taking the time on this, Adam. It's been really enlightening for me. And like you said, I think it'll help a lot of people.
My pleasure. Thank you.